using the blockchain increases security, not increases the risk. Instead of taking 3 to 6 months to purchase a property, it could take 3 to 6 minutes. Having that global marketplace, it allows access to a wider pool of investors.
Welcome back, investor. We have got a special episode for you today, something that you have been asking me about for a long time. And I am not qualified to talk on this topic. That we have Ricardo Johnson here to talk about fractionalized blockchain ownership of real estate shares. Thank you for joining us, Ricardo.
Thank you for having me, Emma.
Yeah, this one, for if you're a first time listener, this show is basically anything investing related. So we talk about passive income so that you can take more adventures. The passive takes care of how you're going to find the time to do it. The income takes care of how you're going to get the money to do the adventure. And obviously the adventure is the adventure part. And so we try to bring guests on the show who are going to talk about like a wide variety of interests for our listener, who tends to be somebody who wants to be more on the passive side of investing, maybe an entrepreneur or professional who maybe has a few rental houses, but you don't want to start like a real estate business on the side, or you don't want to be like a full-time like stock trader. We usually talk more about real estate and private markets. And I think that is why this comes up so often. People are like, oh, what do you think about tokenized real estate? And I'm like, I don't know. So when Ricardo, when I came across you, I was like, this is going to be great for the show. So kick us off by explaining a little bit about what you're working on, like in your elevator pitch, what you're working on right now. And then we can dive a little bit more into your background.
Yeah, so Ricardo, the founder of Oases, and we're actually working on a platform to allow people to own and fractionally own luxury real estate from all over the world. Essentially, I came across the technology back in 2019, and since 2017, I've been working in real estate in terms of management and investment. So when I got hold of the technology, I thought, wow, this is actually a game changer, essentially. And at that time, I didn't have the experience or the confidence to really tackle it head on. So it took me a few years, but eventually I decided to tokenize my property deals. Now, this was done through NFTs, back when NFTs were the way we would create smart contracts and interact with the blockchain. And when that took off, I realized, yeah, there's actually a big demand for the problem that we're solving here. Being able to generate passive incomes, being able to interact with the blockchain and own the actual property deals. The difference was a lot of the investors we had on board were not crypto native. So we had to educate them on what the blockchain is, how to create a wallet, how to interact with the tokens, etc. And decided that we need to build out our own infrastructure, our own platform where people can just, sign up the way they would sign up to invest in stocks and essentially build their portfolio from a few clicks of the button without having to have the huge learning curve of the actual blockchain. So if you notice how we position it on our website, we don't actually mention that we use the blockchain, which, is a bit more user friendly for the everyday investor. We just use the technology as a way to add a lot more security that we use for the actual tokenization process itself, and a way they can actually interact and manage their portfolio.
Okay. All right. So I have so many questions about this. I'm going to ask as we perform this interview, act like I'm like an intelligent fifth grader, right? Like you have to explain it like
Okay.
really basic level. Because I know some of our listeners out there, my husband's in IT. He knows a lot more about blockchain and crypto than I do. And so I have my head wrapped around it a little bit, but let's just start at the very, very basics. Can you just explain again, before we like dive into more of your background on what led you up to this point, like what exactly is blockchain? I know that people are very leery of the term cryptocurrency, blockchain. There's so many scams in real estate and investing and blockchain. I think the reason there are so many scams is because there's a lot of money out there to be made. And so people are hoping that they can pick up on some of the drip drops of the activity. But yet, because there's so much money to be made, it really makes itself ripe for scams. And I think that people tend to be a little bit leery of getting involved in any kind of investing. And then you have investing with blockchain attached to it. You probably have a lot of just risk averse people who are just don't quite understand it. So what does somebody need to know from a basic level to be able to take advantage of this fractionalized investing using the blockchain technology?
I think that the best takeaway from that is to understand that using the blockchain increases security, not increases the risk. Because you have an actual ledger, so you can see exactly where your token has come from. You can't do any transactions with any fake tokens, for example. So it's actually very difficult to be scammed within the actual platform. I think where the opportunities lie, and for where I suppose scammers come into the space, is that I suppose the notion around crypto and cryptocurrencies, people want to get rich quick in general. So there's a lot of people who would create tokens, not necessarily token, but create cryptocurrencies with the hopes and selling it as in you can invest $100 and walk away with $10,000. Now, for people who are,
On planet
I
Earth.
suppose, yeah, exactly, would understand that it's probably one, like, it's too good to be true, put it that way. And it's a high risk that this is actually a scam. And a lot of times people don't take the time out to research the actual founders or research the actual company. What problem is it actually solving? And then get tripped up with the token not doing what it's supposed to do or what they were sold it would do.
Mhm.
I think when you get into, I think now things are moving away. That will always be there, but things are moving away from the actual cryptocurrency part, which is how people interact with that blockchain. So you have the blockchain itself, and then you have the cryptocurrency on top of that blockchain.
Mm.
So for example, if you're using Ethereum on the Ethereum blockchain or any other platforms that use the Ethereum blockchain, you're interacting with those particular cryptocurrencies, if that makes sense. So I'm just gonna, yeah. So with that, there's a difference between the actual coins itself and tokens. So I would say the new wave of utility that's coming into the space now is called RWA, for real world assets. So this is essentially bringing the real world tangible assets that we have in our everyday lives and bringing them onto the blockchain so people can interact with them. So what we're doing is taking the real world real estate asset and bringing that on chain, which means that anyone, anywhere in the world at any time of the day can actually purchase or sell or interact with those tokens associated with that real estate asset. You already have people who are tokenizing luxury watches, people are tokenizing yachts, people are tokenizing multifamily housing, all sorts of real world assets are now coming on chain. So it's going to open the door for a lot more opportunities for, I suppose, the more risk averse person who doesn't necessarily are looking for the 10x unrealistic gains, but actually would want to interact and invest into something where you have realistic gains, but they can actually understand what they're investing into.
Okay. So is it fair to say, I'm going to summarize this like a smart 10-year-old, that blockchain is the technology that creates the ledger that makes these transactions traceable? So it's like a provenance on a piece of art or pedigree on an animal, purebred animal, this type of thing where you can trace back the history of this transaction or of this token. So as it's moving through owners, you can make sure that you're buying the real thing and not some sort of a forgery. So that's the blockchain backbone. And then we're building tokens and coins on top of that.
Exactly.
Okay.
Exactly.
Okay. All right.
Great, actually.
Okay. So
Yeah.
like I said, I think this is a fascinating topic, but because I'm not from a tech background, sometimes I feel like I get in over my head on this stuff pretty easily. But I know that tokenized, that's not the word we want. The fractionalized shares in the public stock market really revolutionized stock trading because instead of having to save
Mhm.
up thousands of dollars for one single share of stock, you can now diversify across indexes and index funds. And I always complain on the show that we don't have an index fund for private markets like real estate. That
Yeah.
direct ownership of these goods, like pieces of art. Art outperforms real estate. If you want to look at it from that, it's really difficult to own a piece of art. So now they have crowdfunding where you have group ownership of these pieces of artwork, which was never a thing before. And then you can put that onto the chain and have people then trading ownership of this on the secondary market, just the same way they do with stocks. And I'm seeing this as a way to revolutionize private market investing and fractionalized ownership in the same way that it was in public markets back. I'd have to look up what year they started doing that. But am I on the right track there?
100%. Yeah.
Okay.
I think another good example of it may not be a great example, but you have timeshares
Okay.
where they would fractionalize the ownership of the timeshare and people could own it and it's in a private market. In some cases, you have actual ownership of the property. It wasn't, obviously it created an inefficient market. People couldn't really sell it.
Mhm.
When they wanted to sell, it was rife with opportunists and high fees. And really weren't actually getting what they paid for. Technically, they couldn't get time in the property, just paying a load of service fees, and it wasn't really an investment.
Mm.
But in terms of the ability to fractionally own something, I suppose it opened the doors for that, where people didn't have
Mm.
to necessarily spend 350,000 on that condo, but they can actually put 50,000 down and be able to access that property as a second home.
Yeah, similar with syndication when they changed the SEC changed the rules for
Yeah.
US securities trading to allow advertising of securities to accredited investors. It really opened up the gates for somebody being able to come in and let's say even a minimum like $50,000, you now get a piece of an apartment building. Problem with these types of real estate transactions and syndications is that they're not liquid and there isn't really a secondary trading market. I know a few companies that are working on this so that people can liquidate their real estate interests on the secondary market through various techniques, and tokenization is one of those techniques.
Yes, exactly. So in our platform, we built out our own secondary marketplace where people could list and buy tokens peer to peer from each other.
Mhm.
And I think one of the main, I would say, opportunities in tokenized real estate now is what we call DeFi, decentralized finance protocol. So essentially, you can build another platform which allows people to borrow on their actual tokenized assets. So instead of having to sell those assets to liquidate to be able to get the cash from them, they can borrow on it and actually collect cash that way without having to sell. So these type of opportunities are available where they weren't available in traditional markets.
Okay, so are you able to buy, let's say a $50,000 minimum goes into a syndication, they put it on onto a platform such as yours. Can somebody buy multiple tokens for that $50,000 when you buy a share, like how many shares of something you buy, and then you can sell those fractionalized? So it's maybe my initial buy-in was 50,000, but now I can sell each one of those for a dollar if I want to. Does it work in reverse that way too?
Exactly. I'll talk you through how our platform operates. So what we do is we find a property. We primarily focus on luxury resort properties. So this could be in Costa Rica, it could be in Tulum, Mexico, for example. Developers building their resort, we would then reserve a few of those properties within that resort and tokenize it for our platform. So we would then create an SPV, actual SPV structure to acquire those assets. And we would basically essentially crowdfund the acquisition of those properties. So let's say it's $1 million for these properties here. People can invest, let's say $10,000, $5,000, $50,000, whichever. And we would create 10,000 tokens for the 10,000 shares
Mhm.
within the S. So each token represents one share within that company. And that's how they have the direct ownership of those assets within that company structure. So if, for example, and because we're registered with the SEC under a Reg D, so we can only approach accredited investors with these opportunities and they have a 1 year holding period. After that 1 year holding period, let's say someone bought $50,000 worth and had 500 tokens within that pool, they can list one token if they want for sale. Or if someone else has 5 tokens available for sale, they can buy those 5 tokens. So after the holding period, there isn't any restriction to how many tokens they can buy and sell from that. So it creates a more liquid marketplace.
Okay, so walk us through your tell us why real estate, why blockchain, what's your educational tech and real estate background that kind of led you up to this point where when you first heard about this, like you said in 2019, you're like, whoa, this is interesting. But then what process occurred between that time and when you really jumped into it head first the way that you have now?
Yeah, my background's in finance originally. And I ended up building out a company, a clothing brand for 10 years. Once I exited that company, because of the stress that comes with building a brand, especially in fashion,
Mhm.
it's not for the weak. So I actually turned to real estate. My dad was a real estate developer.
Mhm.
So I turned to real estate as a way to say, okay, this is something that I can learn as I'm building. I could build assets this way. I could generate passive income for myself. But for me, I looked at it as a foolproof way of building a business. And I started off. So I started off in an area called service accommodation. So this is Airbnb and Booking.com management. So landlords give me their properties, I'd manage it on their behalf. I eventually started buying my own properties and building up my own portfolio, and eventually started helping landlords build their portfolios. So I would go out, find the best deals, negotiate on their behalf, and essentially manage their properties for them once they acquire them. So from doing this, it turned my attention to bigger opportunities. So I thought, okay, where are the bigger opportunities for this? So this is where the resorts came into play.
Mm.
This is where the overseas markets came into play, where you have places where you got really high tourism. There's a lot more upside in regards to the passive income, you could generate those yields. And then you have more emerging markets. Places like the UK is good, or even Europe in general, is good for, I suppose, real estate investments. But to get that capital appreciation, you have to hold the property for 8, 10 years, for example. Whereas there are a lot more emerging markets. Take Dubai, for example. I think since 2021 to now, real estates have increased 75% in capital appreciation. So there's a lot more opportunities overseas.
Mhm.
However, for an investor to buy a property overseas, there's a lot more barriers to entry than it is to invest domestically, right?
Yeah.
So typically, investors like to stay between 30 minutes from where they live. That if anything was to happen, they can always drive over to the property and whichever the case may be. Whereas international investments is a different kettle of fish. You're relying on management to manage your properties. There's a lot more red tape in regards to sometimes you have to become a resident of that country to be able to invest. Setting up any companies over there is a bit more tricky. Currency exchanges, you've got to consider a lot more factors to get those higher returns. So when building out this version of Oases, I thought if I can do all that on the behalf of my investors, then I can cut out the middleman and make it so instead of taking 3 to 6 months to purchase a property, it could take 3 to 6 minutes. And that efficiency would be rewarded with more investors, more properties, and essentially having huge, robust, where essentially we would become asset managers and work on the behalf of our investment community. So when I went back, back when I mentioned earlier, when I started doing it using NFTs, to me, that was the lower barrier to entry way of me tokenizing properties. NFTs, in essence, gave the everyday person the ability to interact with the blockchain and create their own project. And that was for me, I understood that this is a way that I can a cost effective way for me to test the market. And because it was so successful, it enabled me to have the confidence to go for bigger properties, go for a bigger platform, and to literally build it all out myself. I'm a non-technical founder. I don't code or anything like that. I mainly focus on the negotiations, speaking to the developers, doing the financial models, making sure that the deal is a great deal, and providing it for my investor
Okay.
community.
Now, I don't wanna discount the technology as being important, right? But I wanna know that my investments are being managed by somebody with a real estate and a finance background. The technical to me is it can be cutting edge and you can have technical founders, but at the end of the day, like when you're running a business, especially a real world asset business like real estate, I wanna know who's actually managing the people and the property itself. And so explain how that works when you purchase a property and you tokenize it. Who's running it? Who's managing it? It's a physical asset that needs to be cared for in the
Mhm.
real world. What does that look like?
So a lot of the times with these developers, they would have their own rental schemes.
Mm,
So essentially they manage the properties in-house,
mhm.
or maybe they would find an operator who would take over the whole resort and manage all the properties within the resort.
Okay.
So what it does for us, it gives us a lot more confidence that the properties are professionally managed because as they're like, think about it, their 5-star resort, they have to keep up the appearances a lot higher than an everyday management company would for an everyday rental property. Although it costs slightly more, there's a lot more peace of mind in regards to them being able to get great bookings, to be able to keep the property maintained correctly. And for us, it enables us to scale much faster because we don't have to bring any of that management in-house.
Mhm. So you're somewhat like a passive investor. We do something similar in our fund where if we buy like we loan money to real estate flippers. We don't flip
Okay.
houses, right? Like we just find great borrowers and then we service those loans. Or when we bring an equity deal in house, we have one that we own, we're the general managing partners on. But equity deals that we're bringing on, like we're mostly just limited partners right alongside our investors. Our role in there is to negotiate them a better deal than they could have gotten if they'd gone in directly, like instead of an 80-20 split. I mean, instead of 70-30, we might get an 80-20. We'll also negotiate like lower minimums. So let's say the fund minimum is 50 or 200,000, but they can go into that for much less money and be more diversified. So it's like our role there is not to run the apartment building or not to run the actual real estate or to flip the actual house is to find great people who know how they're running it and then negotiate the best deal that we can from
Mhm.
the use of our money to go do their business. So, given that's what I know, and that's what a lot of the listeners also know, Analogize that to what you're doing with the actual management. So you're not owning it, managing it. You're finding kind of similar things that we're finding, like people who know what they're doing. And
Exactly. It's exactly the same way. Exactly the same way.
okay, so where are these properties located? What's in your portfolio? If we crack open your book, what's it look like right now?
So far, we've got our first tokenized property, which is in Dominican Republic in
Mhm,
a place called Cap Cana. We've partnered with developers over there, and we've got five of their developments, five resort developments in this area.
mhm,
So that's our first offering that we've got on board. We've got another one in Maldives, which that won't be complete until 2027,
mhm,
but we're taking that on board now. And we're in conversation for another resort development in Turks and Caicos,
mhm,
another set of villas in Bali and in Phuket, Thailand. So slowly we're just building out, our portfolio offerings. Essentially, as you was mentioning, we just want to be able to provide a platform that people could diversify. So instead of having to be all in one particular location and be exposed to any risk there, for example, they could take that same funds and diversify it over 10 different locations.
mhm.
So it gives them a lot more upside for their portfolio.
And what does that structure look like? In syndication, you've got your general partners, your limited partners. The general partners are in charge of executing the business plan and they're going to have equity. Like I said, that 70/30 or 80/20 split. The general partners will have the 20 or the 30 in exchange for being competent and running the business well. And then all of the limited partners are coming in with their, I guess, shares. They're buying shares in the company. And then they don't run the business itself. They just basically put their money in there and the
Okay.
owners use their money. Is it something like that?
Similar, except that as a platform, we don't have any ownership, direct ownership within the properties themselves.
Mhm.
Where essentially we're in arm's length of the ownership of it. So we set up the actual SPVs, and then we have essentially an administration agreement with that company
Mhm.
to say, okay, we would instruct the lawyers, we would instruct any people to come in to do any audits, the everything essentially. We would handle all that administration part for them, but we don't have direct ownership within the actual assets themselves. Just for legal reasons, it makes it a lot more cleaner. Now, hopefully that could change in the future and we can get involved ourselves as well.
Mhm.
But essentially, we're a platform, essentially like a listing platform, a marketplace to facilitate the transactions, to facilitate the management of it. But the owners of the property essentially have full rights to the income it generates. And as each token has a governance vote, they are in full control of what happens with that portfolio.
Mhm.
So if, for example, let's say 3 years down the line, the property's not performing as well as they want, they can vote to sell that property, or they can vote to acquire more property within that portfolio,
Mhm.
or they can vote to change the managers. Whichever the case may be, the owners of the property have control. As a platform, we just administrate and facilitate the actual transactions.
Okay. Let's dive into the technical side of it a little bit more. Accredited investors only, Reg D fund. So when you can publicly share it, they get onto your platform. So you're more I don't know if this is the right word, but more like a SaaS offering. Like you're the owner of the technical company. Just the same way like my investor portal is owned by some tech founders, and then we use their portal, their software in order but they don't own our property, they don't have anything to do with our business, they're just enabling us as a way to administer our fund to our investors. Is that kinda what you're talking about there?
Exactly.
Okay.
Yeah. Yeah.
Okay, and they could invest with us, the platform founders could invest with us. They could go out and buy their own property and then offer their own fund, which they do on their platform, and that's what you're saying, like, eventually you could do something like that as well?
Yeah, exactly.
Okay. So technically, what has been the issue with doing this without the blockchain? So let's say a syndication, they buy in, they've got their $50,000, however many units they purchased with that. What prevents them from being able to just go and resell that elsewhere? Because I do know a few secondary markets, it's like Craigslist kind of, where they just go and say, hey, I've got this number of shares, but they still have to be accredited to buy into those shares on these secondary markets. So do
Yeah,
your token buyers all have to be accredited? They have to be accredited to use the platform.
exactly. Yeah.
Okay.
So part of signing up to the platform, you complete the KYC, which is know your customer.
Mhm.
We have to do the anti-money laundering checks, and then we have to verify that they are accredited investors.
Mhm. Okay. So why blockchain versus just like the Craigslist version where you just say, "Hey, I've got some stuff to I've got some stuff to sell. I know those usually have to be approved by the general partners before they'll allow that sale. What's the difficulty there that blockchain solves?
I think full control and I suppose ease of the sale. So the idea is to build out a liquid marketplace where there are investors who wasn't able to get in the round we have now, which is a pre-sale round. So all those tokens will be sold and they have to wait until someone wants to sell. So there's high demand for people who would want to sell any of those tokens. What we can do then is create a more liquid marketplace. So anytime they would list it, we can automatically sell it for them. So instead of having to, essentially traditionally, you'd have to find somebody who would want to sell your shares to. As you mentioned, they may have to get approved by the general partners of that fund to bring in a new investor for them to sell those tokens or sell those shares, sorry. But here we have a global marketplace. So somebody in, I don't know, Brazil can actually buy your tokens from someone who's based in the UK, for example, or someone based in the US can sell to someone who's based in Spain, for example. So having that global marketplace, it allows access to a wider pool of investors generally. So it creates a liquid assets for them.
Okay. And how are these tokens evaluated? I know what's your NAV or your net asset value? Is it like, how do you know how much that token is worth? Because if somebody wanted to sell a share in my syndication, sometimes it's not worth as much as they paid for it. So how are those valuations done, and does that increase the
Interesting.
amount of volatility? One thing I like about private markets is that because it's less liquid and they're not having those asset evaluations done so frequently, that it reduces volatility a lot and prevents panic selling and things like that. And so it seems like, you kind of have to accept the good with the bad. So how are those tokens evaluated, and then how does that affect the volatility?
Interesting question. So essentially, we have audits on or evaluations on the properties every 6 months. So we can keep the investors up to date with the value of the actual assets themselves.
Hmm.
However, the tokens are something completely different.
Hmm.
The tokens can take on its own valuation away from the real world asset itself.
Okay.
Essentially, the tokens are backed by that asset. So if, for example, so to go back, so when we sell the initial tokens, that's based on the acquisition costs of those assets day one, essentially.
Okay.
So if it's going to cost us $1 million to buy these assets, we would create 10,000 tokens, all at $100 each. If 5 years down the line, those assets are worth $2 million, that doesn't necessarily mean that the tokens are
Okay.
now worth $200 each. They could be worth $250 each. It all depends on, I suppose, the supply and demand of those tokens. It just means that their underlying asset is backing those tokens.
Hmm.
So ideally, in an ideal world, it shouldn't go lower than the asset that it's backed by.
Okay. Ideally, though, is that possible?
Ideally, yeah. It could. I feel with all assets, depending on the market, depending on the motivation of the seller, for example, they could sell it for less than they bought it if they wanted to.
Mhm.
Essentially, in our marketplace, they list it at the price that they want, and someone else would have to buy it at that price, or they would have to negotiate or send an offer for that particular price. But it doesn't change the underlying asset itself.
Okay. When I log on to my public market trading account, I'm on M1 and I want to buy some shares. I go and I check the price of the share and I decide if I want to buy it at that share price or not. But that share price isn't set by the actual holder of those shares. So how does that work on your marketplace? Who sets the price of that token?
Typically in buying stocks, the price is set by a market maker. So it creates a much more liquid marketplace
Hmm.
because essentially they're buying all the stock that's for sale and then they're selling all the stock that's for sale. So they set the bid and ask of those prices of those shares, sorry. In our marketplace, it's a peer-to-peer marketplace. Think of it as Craigslist or think of it as like OpenSea where you would sell NFTs. The actual seller would set the price that they want for those tokens and then the buyer would have to buy it at that price or not buy it at that price.
Hmm.
So it's it's not as liquid as using a market maker, but because of the regulations that we have now, it's not possible to introduce a market maker into this marketplace without what they call a broker dealer's license, which is a lot more extensive process to create that. But yeah, essentially, they would have to set the price that they want.
Okay. So that's how it's done right now. It's usually more private, saying I bought this thing that I have as shares in as a limited partner. Maybe I had a medical emergency and I need to liquidate those shares. So I just take it around to my friends and family group. Does anybody want to buy these? I'll give you a smoking deal because I need to be liquidated. So something more
Hmm.
similar to what we're already doing.
Exactly.
Okay.
Exactly. Yeah.
Except not friends and family. You now have this broader platform of users who are shopping.
Exactly. Imagine there's a property, let's say the property in Dominican Republic, and you have hundreds or thousands of people who wasn't able to get in and want to buy. As soon as you list your tokens for sale, they can get a notification to say that these are now available,
Mhm.
and you could potentially be liquidated within minutes, essentially. But from our standpoint, we feel that from my experience as well, with these type of assets, people don't really sell. They actually just continue to accumulate more and build their portfolio. That's what we had with the other project that we started with. There is a marketplace that exists, but people didn't use it. People just continue to buy. It was a case where, okay, it's probably better for us, as long as those facilities are available, but to actually create a way that instead of having, if they need to liquidate, instead of having to sell those assets, they can actually borrow on those assets. It's a bit too early to tell at what loan to value that they can borrow at or anything like that. But just having the ability to take those tokens and with a few clicks, be able to get cash for those. And instead of those revenues going to you, it would go to pay off the actual loan itself, but it won't create a taxable event, for example, because you sold those tokens now. You can still hold your assets, can still build your assets, but still get cash flow from it if you need it to invest in something else or just wanted cash flows for yourself.
Okay. So would it be like a wealthy person who's doing like a securities backed line of credit or borrowing on margins, something kind of like that?
I think to get the line of, it's a bit more like having the line of credit.
Okay.
I think people, for example, bring up Elon Musk all the time to
Mhm.
say, like, how is he able to keep borrowing on his Tesla stocks to get capital to buy X or whatever company he wants to buy
Mhm.
and not have to pay tax? He's able to use his wealth and leverage that on other assets. I think people have that, I suppose, that hate towards him because of that, because they don't also have access to it.
Mhm.
If they also have access to it, they would also use that to build wealth
Called
also.
a HELOC.
So
I use it.
exactly,
It's called a credit card
exactly.
sometimes. Life insurance policy. We all have access to this stuff, but we do, you're right. We do gonna love to hate on. But I do the same thing. Have you heard the term in real estate, refi till you die? You're not gonna sell the asset, you're just gonna go refinance the loan, and any money that you take out of that, unrealized equity is still unrealized because it's debt, you're borrowing it, and so you don't
Exactly.
pay taxes on that. So
Exactly.
we all have these available to us. I think people who realize we have these available to us, we're not complaining about S blocks. I'm like, "Great, more power to you. I wish I had a company I could borrow against."
Exactly. But to be able to bring this on chain, essentially without any red tape, you don't have to speak to a lawyer. You can, with a few clicks, be able to, I suppose, stake your assets
Okay.
onto another protocol and get cash is what we want to create.
Yeah. I kinda have to get approved for mine. It's a pain. I remember when COVID hit, I went into my business bank and I said, "Hey, I want a line of credit because who knows if people are gonna be paying rent during this whole thing, right?" Like, "No, we're not doing it right now." Like, okay, so I'm basically cut off from the value of business because they're just not lending right now or because I had to be approved for it.
Yeah.
Somebody tried to tell me not in the bank, but somebody else, they're like, "Hey, how long have you been banking there?" And I can't remember what it was, 5 years or something, like, "And you don't have a line of credit yet?" It's because 'cause you're a woman. Like, you need to go in there and raise some ruckus.
Boy.
So these kinds of things, like, you have to be approved for it. There can be some biases there, but in this case of what you're talking about, it's basically like you're setting it up where if they have the value of this token, they can borrow against it. Enough said. Is it that simple?
In an ideal world, yeah.
Okay.
So it hasn't been built yet. That part hasn't been built yet, but it's something we want to put in place. I feel like in regards to real estate, even if you have fractional ownership, you have real equity stake in the property without any debt, I feel the reason what I suppose where people are really attracted to real estate is that they can borrow on their assets.
Mhm.
They can borrow to purchase the assets. Essentially, they can safely leverage their capital.
Mm,
And with something like this, because you can't do it on the front end, but now there's a way you can do it on the back end of that.
okay. Yeah, and it just seems a lot more, I don't know if transparent is the word I'm looking for, but more technical, less biased. I'm not sitting across the desk from a banker asking them for money. It just seems like it seems like it would be more clear cut.
Exactly. It's decentralized. So you don't have anyone in the middle to say yes or no.
Mhm.
The rules are set by the protocol. You have smart contracts in place, and I suppose with a few clicks, essentially you should be able to actually do that.
Okay. And when's that coming online? What's the timeline that you have for rolling that out?
I have it earmarked really for mid 2026
Okay.
because the tokens have a 1 year locking anyway. They wouldn't be able to do it prior to that. So the idea is to build out the actual real estate pools itself, build the portfolio, and then providing that the actual investors are looking for something like this, they're happy to use it, then we roll that out while they're holding their
Okay,
tokens.
perfect. So it's like making use of that time that it's locked up. Now the lockup there, like we have a lockup in our fund too, and people are like, why? Why do you have a lockup at all? One, our loans are done in 6-month increments, so we'd have to basically cash
Agreed.
them out if it was less than that. So I think it's important to understand like what that lockup period is. But the other reason is because we have fixed expenses per investor in our fund. And if they
Mhm.
liquidate, then it makes the fund more expensive to administrate. And so ours is an arbitrary number that we decided on based on expenses and loan terms. How do you
Mhm.
determine that 12-month lockup period?
So that's as a Reg D security token,
Hmm.
we have to have a holding period of at least 1 year
Okay.
for them.
Regulatory
Yeah,
restriction.
yeah,
Okay.
exactly. Ideally, it'd be great to not have it and create more of a bit more control for investors because some investors may not want to hold their tokens for 1 year.
Mhm.
But yeah, by law, we have to do that.
Okay. They're protecting you from short-term capital gains. I'm sure that was their
It's
intention behind it.
and I understand why it's there, and I think it makes sense. And I suppose for us, we charge fees, transaction fees on the actual investment itself. So when you buy, you would pay a fee. When you sell, you'd pay a seller's fee. So that's essentially how we would make money as a platform. So the longer they hold it, or however long they hold it, doesn't necessarily make a difference to us. Essentially, the more that they trade it, the more money
More
we would
money you
make
make, yeah.
anyway. But yeah, exactly. But yeah, for us, it makes sense to hold it for at least a year. But
Okay. I'm glad you brought that up because the revenue model behind any business is really important for a customer to understand like what those motivations are. And so people are like, I always love when an investor comes to me like, how do you make money on this thing? Because then I can explain our revenue model. They can understand our motivations. And so your basic revenue model is that with trades, you're going to have some sort of a fee. Is that like gas fees when you're trading cryptocurrency? Is it a similar type of concept? And maybe explain what gas fees are and if they're related or not to what you're talking about.
so gas fees are essentially fees that you pay to do transactions on the actual blockchain. Because the blockchain's ran by people, essentially, they have their own nodes. This is just an incentive for them to get paid for validating that transaction,
Hmm.
essentially. And depending on what blockchain you use, whether it's layer one or layer two, the fees can vary depending on how many people are processing transaction on the chain at that particular time. That's actually separate to what we charge. We charge an actual transaction fee,
Hmm.
and then you would pay the gas fee. So the gas fee would be, let's say, pennies, for example.
Hmm.
It's just a transaction, but the actual transaction fee would be an actual percentage based on how much is actually being sold or
Okay.
transacted.
Okay. I think of gas fees somewhat electricity is expensive, right? Or computer space is expensive for the validation. And so I think of gas fees as just paying expenses on that stuff plus a little bit of juice to incentivize people to actually keep the chain up and running. And so you're going to
Mhm.
have fees on top of that would be more like, I don't want to say commissions, but like closing costs, so to speak.
Yeah,
Okay.
yeah, we can call it a commission. Yeah, it works the same way. Yeah.
Okay. Perfect. Yeah, that makes a lot of sense. And I think that people have to understand like where these fees are coming from. Years ago, it cost, I don't know what it was, $25 or something to make a trade on public markets. And so when that started to go away, was investing clubs came in so that they could make trades together to get rid of some of those
Mhm.
fees or to lower or split that across the club. And then you had free trading, E-Trade,
Mhm.
M1, Robinhood, those kinds of things start to reduce those. Is there going to be a trend like that in this market as well? And how are they making money and how are they keeping these platforms up and running? How does that model inform your model?
Interesting question. It's hard to tell like where things would go in regards to gas fees and whether they will come down. Really, gas fees are really a big hindrance, I feel, in the marketplace, especially for platforms like using Ethereum. Like that's has the highest gas fees,
Mhm.
for example. People doing $1,000 transaction and having to pay 50, $60, it's really stops you from doing that transaction. And you might have to wait till tomorrow to get lower, whichever the case may be. I don't know. It's hard to tell, but you're paying really for the security of that blockchain. When you have layer twos, they can actually reduce those fees down. For example, if people are using XRP for transactions, you're paying nearly nothing to use their blockchain to do a transaction. So I can see as more people start to flock into the actual space itself, I feel like real world assets, the adoption of real world assets will eclipse the actual cryptocurrencies itself,
Hmm.
the trading of those currencies. And I think with that, you're bringing people in who may not want to pay those type of gas fees.
Okay.
And that would actually force developers and innovators to create ways to reduce those to zero in an efficient way.
Yeah. I agree with you. One of the biggest criticisms of cryptocurrency, other than the fact that it's ripe for scams, like fake dashboards where you think you're trading, but then you realize you're just giving money to the scammer's bank account, things like that. The scams, the biggest thing is that the criticism is that there's no inherent store of value. This is just an air coin. It doesn't mean anything. It's only worth what you're willing to pay for it, but it doesn't do anything. And so the real world value stuff, that's where it gets really interesting to me, because that criticism of blockchain or cryptocurrency specifically goes away because now it does significantly represent something in the real world.
Exactly, exactly. I think a lot of cryptocurrencies in general are really built off hype.
Okay.
So
I mean,
you're banking on
I know
more people want to be,
we made a lot on Doge, so
oh, you got
we
in, you're
did. Yeah,
lucky.
we
We're
did.
lucky.
It was an accident.
And that's, in fact, that's actually a great example because that's what you call a meme coin.
Yep.
And meme coins, in one sense, it's good because it tells you straight away, like there's no value
Yeah.
here, as in there's no underlying utility. This token doesn't do anything at all.
Yep.
It's just a meme coin.
Like a
So you're
collector's
actually
item.
buying, yeah,
Like
exactly.
like picking up those
Exactly.
NFTs with the drunk monkeys or whatever it was. Like, it's just the enjoyment of owning the collector's item. And my husband thought it was funny and it was super cheap, so he bought a bunch.
Exactly. It's a joke. It's a joke. And it's supposed to be a joke. The more people come into that, then people can make a load of money off it if you got in early enough. But I feel now, especially this time around, like now was, for example, we're supposed to be in a bull run. So this is where a lot of money comes into the market and the tokens really pump. And the only cryptocurrency that's really pumped is Bitcoin and a few other coins, but nothing's I suppose the momentum that everyone was really expecting. And for someone like myself, it's good and bad because I'm also a cryptocurrency investor, but it means it opens the doors for people who are in the space to now take their eyes off the 100x and actually look to, okay, I have this portfolio of cryptocurrencies. Where can I actually deploy this capital in somewhere where it's safe, in somewhere where it's stable, and somewhere where I can get real returns from it. And I think the real world asset part of it will start to gain traction.
Yeah. And this question here has nothing to do with real estate, but as someone in the space, let's pretend that we're fractionalizing shares of, like you said, luxury watches or fine art. In a real estate transaction, you're trusting that this is professionally managed by the company, like the ownership company, and you're basically just providing a way to bring in investment funds into there. Who's taking care of the watch? Like, where is that? And how
Yeah,
do you know where it is?
exactly. I didn't actually invest myself. I was just doing the research and I
Uh-huh.
found it and I was like, this is quite interesting. But it's held in a vault in Switzerland.
Okay.
So that's how they hold it. I think with artwork as well, you want to make sure it's in the right climate conditions that it's going to protect the artwork itself. It's a tricky thing to solve because I suppose you're not in front of it. It's you have a digital version of that asset. You can't actually go and touch and feel it essentially. So it's a tricky one.
Yeah,
Whoa.
good for a movie. There needs to be like an Ocean's 14 or how many are they up to where they go and raid all of the fractionalized vaults and take all the stuff. They just send video pictures. Look, it's still fine. It's still there.
Exactly. And it's just a looped video or something.
Yeah, it just
No,
gets me
it's
thinking like, who's watching the baby? You know what I mean?
and I think this is the thing. I think especially in the crypto space, people deem it as trust. You don't have to trust anyone. We just have to trust the code. But the reality is, you always have to trust somebody somewhere along the line. There's still a real person involved that you actually have to trust. So even you buy into tokenized real estate, for example, you'd have to trust that the person who's appraising that asset is appraising it correctly.
Hmm.
If it's someone holding luxury watches, you got to trust that at this particular time right now, that watch is within that vault. And so you can't absolve trust completely. But yeah, I don't think it's a huge risk, but it's to get the mindset of it could be trustless. You do have to trust
Okay.
somebody. there's someone at the end of that has to verify these things.
Yeah, agreed. It's not like you're just investing in something that happens spontaneously in nature, right? Somebody has to maintain all these systems and all that costs money. And I think that you guys are leading the way for the real world assets, especially real estate, which I'm going to trust a resort a lot more than I'm going to trust like a watch in a vault or some artwork in a vault somewhere. You're leading the way for smart contracts in many ways to be able to solve a lot of the issues that we're having in uncorrelated types of areas. We'll use the example of the fake video, the deep fake, but eventually having that on the chain source, it's like, if the video doesn't have an NFT, it's not real and you can't
Yeah.
guarantee that it's real. And Zelensky telling people to put their arms down, and you're like, that doesn't have an NFT. I'm not following those orders. Do you see this as having broader implications?
Interesting question. I think during I suppose, the NFT hype
Mhm.
around that time, 2021, 2022, I feel like there were a lot of talks of using this technology for things like verifying voters, maybe have a digital passport, a driving license. And I think there's still room for all those applications, all those use cases with the technology because it can be verified from anyone. Anyone can verify it.
Mhm.
I'm not sure why it hasn't been adopted because the technology is actually there
Yeah.
and people would trust it. I saw recently, like going off what you said about the video, I saw recently an article saying that deep fakes should have at least a watermark
Gosh.
to state that they are actually AI generated and not real. Like that alone in itself would add some verification, but it's then very difficult to verify at source. For example, was that photo taken on a camera or not? Or was that generated by AI or by any graphic designer, for example? It's very difficult to have that at source. And I feel like anyone who could really solve that problem using NFTs, today is not a big issue. We're really using technology to make memes and to create funny videos and those things. But there will be a day where it's going to be a bit more nefarious. And I feel that this type of solution will be demanded to be able to protect people.
Hmm. Yeah, it's a fascinating topic because I think that this kind of stuff affects all of us. You're going to Web 3.0, like who's paying for all of that so that my Facebook pictures are not being stolen. This just gets so big when you start looking, like you said, at various use cases. And I'm excited to see where this goes, but it's exciting that it's being used right now, that you have a platform where we can actually go and start getting that extra liquidity and flexibility on hard assets that up to this point, we've really only had in paper assets. What kind of person did you describe the type of person who would be most likely to use your platform? Should anybody who's listening reach out to you after the show? And if so, who would that person most likely be? Like, who's going to want to have the conversation with you that you want to talk to after the show?
Great question. So at this stage, we're really looking for people who can become advocates for our platform.
Mhm.
So people who are forward thinking, people who, you know, ideally have experience in real estate. So they know the actual pains of investing. They have their own portfolio and looking for a new way to invest, a better way to invest, in fact. They already have some experience with using the technology. So they already have a wallet, for example. So they understand the real value of tokenized ownership in itself and turn to our platform Oases as a way to now generate passive income from using it. You can reach out to me on my own oases.io. You can connect with me on LinkedIn or Instagram. Just reach out and DM, whichever. And I'm happy to speak to anyone essentially. If they have questions, if they want a demo of the platform, we can get the team to do that. And yeah, essentially they can start getting involved.
Yeah, perfect. The first time I tried to buy Bitcoin, it was like 2015. I don't know. And I logged on. I didn't
Oh,
know
wow.
even how to use the website. So bringing that level of user friendliness to non-technical people, I think it's what really democratizes this because I didn't buy my first book Bitcoin until Coinbase because even Binance was like, I don't know how to use this. So just making it easier for non-technical people to get on there is a huge step forward. Before I let you go, I'm curious about your own kind of passive income journey because this does really increase the opportunities for passive income use. You mentioned that your dad was a real estate developer. Like that's not a normal job for a dad to have. And even today,
Mhm.
much less years ago. And I feel like your own kind of journey with that, with real estate, with passive income, and now you're running a business, like you said, it's not for the weak. It's super time consuming. It is emotionally stressful,
Uh-huh.
financially risky. So walk us through just briefly your own passive income journey, what your goals and your bucket list look like. You mentioned you were living in Barcelona. So in some ways, maybe you're already living the dream, but walk us through what that looks like in your future.
as I said, when I turned to real estate, it was to build wealth. It was to build that passive income. And initially, it was the case of how can I really live off it? How can I build enough passive income to generate, let's call it £3,000 a month to pay my bills, essentially? And I feel like I took the wrong approach because it meant that when I ran the figures, the amount of real estate I would have to own to generate that level of income, I'll start scratching my head like, okay,
Same
where do I
journey, same
start?
thing.
Yeah, and I feel like people getting into it is something that you can take away. And then what I realized is, okay, how can I thought, let me start small. What would I need to be able to pay for my car, for example?
Mhm.
That's only £500. How can I get £500 to pay for my car, or whichever the case may be? And like slowly but surely being able to build enough assets to take off liabilities one at a time. So I found that was a much more viable approach to building wealth in that way. Then came an opportunity where I was told about a new strategy, and it was a very interesting strategy. And it took, especially in the UK, it took the market by storm.
Mm.
Just if, in case you didn't know, like real estate in the UK is like is a huge business for everyday people, let alone institutions. And there was a strategy what you called rent to rent, and essentially it's an arbitrage between
Yes.
renting the property and then re-renting that same property out on Airbnb or to more tenants, and being able to generate that spread in between. And I actually became really good at it because I already had experience dealing with landlords. I already had a management agency. It was very easy to then propose this opportunity to clients. And in hindsight, it's a great way to build passive income without having to own the property. You just have control of the property.
Mhm.
But on the other side of it, the liability risk that you take on is far higher. It got to the stage when I started having courses, online courses, where I would train people on how to build their portfolio this way. And I think for the starter investor, it was a great and cost-effective way to them to start feeling like a landlord,
Mhm.
to though you don't own the property, you can still build a portfolio. And that now we stopped doing that a few years ago, but now it's a huge industry in like a gray market in itself.
Yeah.
And yeah, so just from that, like I've seen people be able to build £10,000, £20,000 per month just from building a portfolio that way, as opposed of traditional investment. My favorite strategy personally is called, I call it BRRR, or the BRRRR strategy,
Mhm.
where you buy, you refurb, you refinance, and you rent that property out. For me, that's what's been the most successful, primarily because for me as an investor, I need to have capital appreciation and passive income. It's the reason why I don't necessarily invest in stocks as much is because I'm only in growth stocks. You know, the dividend stocks, they don't really pay out as much. I'm only in growth stocks. So for me, it doesn't tick the both boxes. So it was important for me when creating Oasis was to create a way where people can have access to both capital appreciation of the actual asset and passive income from the asset. For me, I feel like real estate is one of the main, even maybe even the only asset classes which can do both for you.
Yeah, agreed. I feel like the trade-off between cash flow and appreciation is often if you have something that has both, it's a unicorn, and it's usually still better at one than it is at the
Hmm.
other. But great insights. I always like to ask about the revenue motivations and also just about your own passive income journey because I feel like sometimes people are trying to sell the passive income dream when they haven't actually done it themselves or they've done it by
Hmm.
a business that they run, but it's gotten a little hands off over the years. Let's put our money to work on this show. And you have provided a really cool opportunity for people to be able to do that and to build a business. Because once you have your passive income sorted out on your own side, then you really get to step back and say, what do I want to do? What do I want to build? How
Exactly.
far do I want to take this? Because I can. Do I want to? And then you start to get at some really interesting things. So appreciate you sharing your story with us. There's so many more questions I want to ask. We didn't even get to quantum computing cryptology, like we're mentioning, like, when somebody buys a multifamily with me on the East Coast, they're like, "What about climate change?" And I'm like,
Hmm.
I don't know. Like, just get insurance." Like, there are just so many issues that this touches on and so many more use cases that even inside the real estate, like, maybe next year, we'll have to have you come back and give us another interview and catch us up on how you're doing on the loan side of things and how you're doing on your own passive income journey. It's just fascinating stuff. So I appreciate you coming on the show, Ricardo, and sharing that with our listeners.
No, thanks for having me, Emma.
Yeah.
It's been great.
Definitely, if you wanna get a hold of me, investwithemma.com. I make it really easy. Calendar invite, same thing. Just talk to me about whatever
Mhm.
you wanna talk about, and I will do my best to point you in the right direction. Or if you would like to invest in our fund, same thing, investwithemma.com, and we can get your money working for you passively so you can go on more adventures. I'll see y'all next week.